Okay, I think I'm streaming here. I haven't done this in a very long time, so I apologize if anything looks weird. I'm gonna try to test this right now with my phone to see if it is actually working. So just give me 1 second here. Okay, I think it's working. If anyone happens to be watching, if you could please leave me a comment and let me know if you can hear me and if you can see everything that I have displayed on the computer. So let's see here. Okay, so a couple people are joining in. Looks like Jen Lin says hi, so hello. Juan asks if I can talk about BNGO. Octavio says yes. Okay, so it looks like everything is working. So I hope everyone is doing well. My plan for today is to do a stock market kind of weekly recap today. I'm testing things out here with YouTube. I'm not sure if this will be a recurring thing, but I wanted to do more live streams with you guys just to kind of connect with you a little bit. So I figured maybe I could go live on a Saturday, do a little bit of a weekly recap for the stock market and answer any questions that you guys have. Someone is talking about JFK on a certain island. Feel free to add any conspiracy theories you guys like, but those are always kind of fun topics. Anyway, by the way, I haven't done a live stream in a very long time, so I'm a little nervous, so I apologize for that. I'll try to stay on topic here, and let's see how we can do this. Okay, so let me just kind of do a quick recap of the stock market, and then I'll answer questions maybe throughout it, but definitely at the end of the weekly recap. So when looking at the stock market here, we have, all right, so the Dow Jones, over the past week, markets were kind of flat, but a little down in some areas. Like Dow Jones was mostly flat for the past week, down just about 0.16%. S&P 500 was down more, so it was mostly a negative week. S&P 500 was down over 1%, and to date, I believe it is down over 12% from its highs. And then the NASDAQ for the past week suffered the biggest losses, so we actually saw quite a few tech stocks getting beaten up a little bit this past week, and the NASDAQ was down 2.6% in the past week, and it is currently down over 20% from its highs. So that's essentially a bear market there. So it's down over 20% from its highs in this crash here that you can see here, this crash or drop, whatever you want to call it. But NASDAQ is pretty much in a bear market. Now, in terms of why the past week was so bad for stocks, there's a few things that happened. So we had the Fed minutes this past week, and the Fed basically said that they are going to continue to increase interest rates until they can get inflation under control, which of course many of you know inflation right now is essentially at like around a 4-decade high. So that spooked investors a little bit because it basically means that interest rates are going to keep rising, which can damage the economy even further. And I'll give you some examples here as we go through this. But another thing that we had was retail sales came in for July this past week. And retail sales were mostly flat in July. And they were actually helped a little bit because of easing gas prices. Of course, we've been seeing like some of the highest gas prices that we've seen in a very long time, and it's been horrible for everyone, at least over here in America. I live in California, and we've been seeing some of the highest gas prices in the entire country, and it's been really bad. So gas prices have actually been coming down a little bit, and that actually caused gas sales to drop by almost 2% in the month. So that was helping a little bit. And when you actually exclude auto and auto parts, retail sales for July actually increased very, very slightly by about 0.4%. I'll scroll down here in case there's any information you guys want to look at, but I have some notes here just that I took on the side just to kind of speed things up a little bit. But where we did see things drop a little bit more was in non-essential sales, like department store sales that dropped by 0.5% and clothing store sales that dropped by 0.6%. But the story is not actually so much in sales. as much as it is in profits, because if you happen to see Target's earnings were really bad, and I'll actually show you in just a second. We'll take a look at Target, but like Target stock dropped, and that was because they reported earnings for this last quarter, where profits I think dropped by like 90% or something. Like it was some really big drop, and they had already dropped by a lot more the previous quarter too. So I'll show you guys that in just a second. But essentially what's happening is that a lot of these department stores, because of the supply chain issues, they're kind of left with a lot of extra inventory, and so they've been having to mark down a lot of stuff, put it on clearance, and that hurts their margins. And then on top of that, if you also have struggling sales in things like department stores or clothing store sales, Target is not so much relatable to that, because a lot of people shop at Target for just essentials and all kinds of different things. But that's actually where Target spoke about having the biggest weakness in their sales was clothing and things like that, like non-essential sales. So that stuff is still kind of struggling. But year over year, July retail sales actually still increased by 10%. I'm not sure if it's listed on here. Yeah, here it is. So overall retail sales rose 10% in July compared to a year ago. And I think the reason for that is that I think people are just kind of spending a lot of money with debt. I think they're just taking on a lot of debt, which is not really a good thing. But I feel that a lot of people are being a little stubborn about us being in a recession. And of course, a lot of people, especially the media, will tell you that we're not even in a recession, but or that we haven't been in a recession. But I think that's going to slowly catch up to people. And I think people will slowly start to watch their spending a little bit. And of course, as it's noted here in the Los Angeles Times, nearly 70% of U.S. economic activity is actually from consumers. So as soon as consumers start to tighten their budgets, yeah, it's going to affect the economy. And I don't know about you guys, but I already see it with a lot of my friends and family who have been becoming more budget conscious lately. Sorry guys, let me just take a quick look at any comments in case anybody is saying anything in particular. But okay, yeah, it doesn't look like there's too many comments for me to respond to at this time, but we'll just kind of keep chugging along here. Okay, so moving on. Home sales is actually where we saw quite a bit of struggling this past week. So home sales came in for July. They reported for July. And when looking at it, we actually saw a pretty big decline in home sales. So because of rising interest rates that make mortgages more expensive, people are essentially not buying houses right now, and house prices continue to go up. So what we saw in July was a 6% drop from June and a 20% drop year over year. So July house sales were down a huge amount. Here it is, 20% drop from the same period a year earlier. So house sales are down a lot. And this is actually the 6th consecutive month of declines in house sales. And prices are still going up though. The median house price actually went up 11% year over year, and the average house is over $400,000 here in America. So house prices are still very high, and interest rates are very high, and so people are just not wanting to buy houses at the moment, and so you're seeing housing sales drop. Now, what I hope for is that this leads to falling house prices, because I would love to buy a house myself. I don't own a house, I rent right now, but I would love to buy a house. And so hopefully what ends up happening is that people stop buying houses and the prices go down, but at the same time, that's going to affect a lot of companies. And I'll show you some stocks that had the biggest gains and losses, and a lot of them were real estate companies that saw dramatic declines this past week. Now, on top of all of that, we of course have recently had the Biden Inflation Reduction Act, and that's been getting a lot of mixed reviews. So with the Inflation Reduction Act, you're obviously going to have two sides here, right? Because it's going to be very political. So you'll have the Democrat argument that is very in favor of the Inflation Reduction Act, and you'll have Republicans who are very against it. In my opinion, the truth is usually somewhere in the middle, but overall, the Inflation Reduction Act is kind of a weird bill, it's kind of a weird act here. When you look at it, Democrats will argue that it increases taxes on people and businesses making over $400,000, which I generally think is a good thing. But Republicans criticize it because it's spending over $700 billion during a time of record high inflation. And a lot of that, like hundreds of billions, are going to climate change issues and healthcare, which a lot of people do care about healthcare. A lot of people also care about climate change. I consider myself a bit of an environmentalist. I definitely care about the environment, but I'm not sure that spending hundreds of billions on climate change is the right move during record high inflation. Now, Democrats will say that it actually helps with inflation because the way that they're spending it on climate change is to ease the burden on consumers that want to purchase things, for example, like electric vehicles. There's like a $7,500 tax incentive for electric vehicles, but we'll touch on that in just a second because it actually comes with some restrictions. But the other thing that Republicans have been criticizing of it is that it hires nearly 90,000 new IRS agents. Now, Democrats will argue that this huge cash infusion into the IRS to hire like 90,000 IRS agents is to target the wealthy. It's to target the wealthy and to make sure that we collect taxes from the wealthy. However, Republicans are arguing that the wealthy elites have enough money already to hire lawyers and accountants that fight off the IRS. So they usually just kind of get away with stuff. The people who can't really hire lawyers and accountants to fight off the IRS is usually the lower income Americans. So the fear is that these, nearly 90,000 new IRS agents may come after regular people too. Who knows what the truth is? I guess some of it depends on how much you trust the IRS or how much you trust the government to actually do the right thing and go after the wealthy. I personally don't trust the IRS. I've never trusted the government, and I don't trust either party. I don't trust Democrats or Republicans. I don't have faith in really either one. That's just my personal opinion. This isn't a political channel, and I don't care about politics that much. Whatever your guys' opinion is, I love everyone. It doesn't matter to me. But the point is that giving more money and more power to the IRS, I'm not a huge fan of it. If anything, I'd probably consider myself a little more libertarian than anything else, but I've never been a big fan of making the government bigger and more powerful, so I'm not a huge fan of that change. But I do think that there are some good things in here that could help. Now, when talking about that tax credit, so the EV tax credit, I was reading up on it, but it basically, let me see if I can find the information here for you guys. Maybe I'll just read it off for you. But and this is a more conservative site that kind of criticizes the bill, so just kind of keep that in mind. There's some bias here. But the $7,500 tax credit, in order to qualify for that when you purchase a new electric vehicle, the electric vehicle itself needs to only cost up to $55,000 for sedans. And SUVs and trucks need to cost no more than $80,000. Now, I actually like that. I like that because I think electric vehicles are too expensive and I would like the prices to come down. So I'm actually a fan of that. But Republicans criticize that because they say that the average electric vehicle right now costs $66,000 right here. So the average electric vehicle price has increased 13% to $66,000. So these cars are not going to, on average, qualify for that tax credit. But ideally, you have to push them. So ideally, it will push these electric vehicle manufacturers to lower the cost. The problem is it's not easy to lower those costs. And another part of this bill is to force these manufacturers and suppliers to source more of their parts from America, which is also going to raise input costs. So it's not going to be easy for these electric vehicle companies to lower their prices. And we actually saw a lot of electric vehicle related stocks decline heavily this past week as a result of that. So like I said, it's been a mixed bag. Like, it depends on how you look at the bill. I think it's like 700 pages long, so there's a lot of stuff in this bill. I'm sure most people don't even know what's in it, but it's kind of a mixed bag, which is usually the case with anything from the government. It's usually hard to get a straight answer on most things. I'm not sure if it's going to help much with inflation, but hopefully it does. Anyway, that's kind of my weekly recap. Now, if you guys want, we can take a look at what stocks have been doing here. So if we look at the biggest gainers for the past week, and let me just check, by the way, if there's any comments from you guys. So let's see. Looks like some people are asking me about Airbnb. Some people are asking about Ulta. We can definitely take a look at some stocks, by the way. I just kind of want to finish this weekly recap, but Octavio asks, inflation, any idea when it will end? He also says Trump, he will fix all of this chaos. Says, can you comment about possible impact in the U.S. market due to the China housing collapse situation? And there's actually not a lot of people in the live stream, which makes me feel like I'm not as popular as I was hoping I would be. But that's okay. Yeah, so in terms of inflation, I don't want to go into the Trump stuff because that gets political, and I don't know. I don't like to alienate my viewers like either way. So I usually don't get into politics much. But in terms of inflation, any idea when it will end? I'm not sure when it will end. What I'm hoping for is that a lot of these like department stores, a lot of these retail stores have a lot of backed up inventory, and so they're gonna have to put it on clearance. And I'm hoping that will help with inflation, because if you look at it, look, for example, let's look at the biggest declines. So this is by large cap stocks, and if you look at let's see here, Target should be somewhere on this list. Let me see. Maybe how much did Target fall actually? Let me check that really quick. Let me just move this to the side really quick. So Target, what's the ticker symbol for Target? Is it like TGT? Yeah, okay. So the past week Target fell by over 3%, and that's because they reported earnings, and earnings were not that good. So if we look at Target earnings here, I think I had it opened up somewhere, but yeah, right here. So Target profit plunges 90% as inflation weary shoppers pull back. And the reason for that was because they have so much inventory that they had to put it on clearance. And so when they put it on clearance, that ended up hurting their margins. And so they saw a 40% drop the previous quarter, a 90% drop this quarter. Now Target says that this is behind them, so they say that they're going to be able to move forward past this, following this. So hey, maybe Target is a good pickup as a stock here. It's down quite a bit. So it's down, let's see here. It's trading pretty close to its 52-week low, and from its 52-week high, let's see, that's 268. We can do some math here. Let me just put a percent calculator. So from its 52-week high to its current price, Target stock is down like close to 40%. So what the heck is going on? Okay, so it's down close to 40%. So Target stock is down a lot. And by the way, Target should have a pretty nice dividend. Let me see, TGT. So right now the dividend yield for Target is at like 2.6%. And the nice thing about Target is that they've grown that dividend for over 5 decades in a row, and they've got a pretty good payout ratio and pretty good growth rate. So it's looking pretty attractive as a dividend stock. The problem though is that profits are plummeting right now. What is expected for them to do in the future? So this year they're expected to grow sales by around 3%, and then around 3% next year, and then this next 5 years, EPS growth is expected at almost 20%. So actually, their growth estimates are looking pretty good. And the current price right now of 167 is well below the average analyst price target of 192. So I don't know, Target is starting to look kind of attractive. What's their valuation like? I'm just kind of curious. Yeah, valuation is pretty bad though. I mean, they're like 40% more expensive than the sector, and they're even like 20% more expensive than their own 5-year average. So it's not a cheap stock, but it's kind of an attractive dividend. What do you guys think about Target? Let's see, what else we got? Okay, Carlos says, oh, the chat finally working. It didn't show up for the past 10 minutes for me. Okay, maybe, I wonder if anybody else was struggling with the chat. Buster says, I'm listening, thank you. Thank you for stopping by, Buster. Pause. Okay, let's see. Error. YouTube is not receiving enough video to maintain smooth streaming. As such, viewers will experience buffering. And by the way, this is the first time I've done streaming in a really long time, so I'm sorry guys if anything is delayed, if there's any glitches here. It's definitely going to get a lot better in the future when I figure how to do this stuff out. So this is the first time I've done it in a very long time, but I hope you guys are enjoying it so far. Okay, and Carlos says, really, the stream seems smooth. Okay, that's good to hear, Carlos. Thank you for letting me know. I hope everything is good. I hope everyone's having a good one. And then Billy says, no delays. It's great. Awesome. Thank you, Billy, for letting me know. So Pawzilla says, thoughts on my portfolio. Says Tesla, and then he's got Google, Amazon. So I'm guessing that these are in order of, well, they might be, yeah, I'm guessing these are in order of largest to smallest. So he says that he or she, I'm not sure, but says that he owns Tesla, Google, Amazon, Apple, Nvidia, Disney, Berkshire Hathaway, MasterCard, Microsoft, and Realty Income. So Realty Income could be a little risky, I guess. I don't know much about them, but I usually don't invest in a lot of real estate. I'm guessing that's a real estate investment trust, but I don't usually invest in those. Tesla is good, but it's pretty highly valued. And it was running up a bit, but it was kind of running up a bit, but then it kind of, yeah, it's in this kind of weird spot. It's in the middle of its 52-week range. Personally, I've felt that Tesla stock has been a little overvalued recently. I talked about it in a couple of recent videos, but it's still down quite a bit from its highs, and they definitely have a lot of future potential. But if you look at like their valuation, it's usually an expensive stock, and that's always the case with Tesla, unfortunately. And you have to think of it more as a high growth stock. But you look at their valuation here on Seeking Alpha, Tesla, they're like hundreds of percents more expensive than the sector. But when you look at their PEG ratio, their price earnings to growth ratio, when you factor in the future growth, they're actually not that expensive. They're actually only like 37% more expensive than the sector. And you also have to keep in mind, Tesla has way better margins. I mean, Tesla, they have a lot of future potential, but you have to have like long-term vision with Tesla. You cannot look at Tesla right now and be like, oh, is it a value stock? Am I going to make a quick buck? It'll be volatile for sure. You might be able to swing trade it if you can time that type of stuff. I suck at that, so I don't ever mess with that. But for me, Tesla is just kind of a long-term play. I think electric vehicles will keep getting bigger, especially with the rise in gas prices. I think people are like really pissed off about gas prices. So, and especially here, I live in California, especially here, most people around me say that their next vehicle will for sure be an electric vehicle, and usually it's a Tesla. So I don't know, that's some of the stuff that I like about Tesla. What else? So he also owns Google. I think Google's fantastic. Owns Amazon, fantastic. Apple, it's not super exciting to me anymore, but that balance sheet, man, they can do something crazy out of nowhere and you won't even see it coming. So Apple, I still think is pretty solid, pretty low risk. You've got Berkshire Hathaway. I've never been a fan of Berkshire Hathaway. It's kind of low growth. It's not that exciting. I actually don't like the companies that they invest in. I think they're too boring. So I'm not personally a fan of Berkshire Hathaway, and I never even felt like the valuation was like really low or anything special. But I get it. It's a giant company with a giant amount of cash. And I mean, one of their biggest investments is Apple, right? So it's not bad. I'm just not a huge fan of it. I'd rather invest in different stocks myself. And then MasterCard is good. I just prefer Visa. I think Visa is more dominant. I feel like it's more secure, more reliable. But MasterCard is good. They tend to have more growth opportunities too. And then Microsoft, of course, Microsoft's my number one largest stock. Of course, I love them. I actually have another video coming out about Microsoft really soon. So overall, I think it's a pretty solid portfolio. But if that's ranked from largest stocks to smallest, I just wouldn't have Tesla at number one. I think Tesla is a little too risky at these levels to have as your biggest position, especially when you have Google, Amazon, Apple, Nvidia. I forgot to mention Nvidia, Disney, you've got Microsoft. I mean, those are some very solid companies. I would increase those positions and maybe lower Tesla a little bit, but I would still keep Tesla myself, but I just wouldn't have it be my number one largest stock. Airbnb. Okay, so people have been mentioning Airbnb, so let me cover that really quick. You already covered all the popular stocks you're currently talking about. Thanks. Let's see. Quick thoughts on Ulta. So, okay, so Ulta, well, okay, so there's a couple stocks that people are asking me to look into, those being Ulta and Airbnb. So let's just quickly run through those. So let's see here with Ulta. So Ulta is not going through a huge drop. They're doing pretty well, but they're not up by as much as I thought that they maybe would have been over the past 5 years. They're up 65%. They did have a pretty big drop in 2020. Of course, that was with like retail lockdown, the pepperoni lockdowns, all of that type of stuff. But after that, it surged up and it actually grew by a huge amount from those lows. I mean, it like more than doubled from the 2020 lows. So more recently, Ulta stock has skyrocketed. It's an interesting stock. Like it's an interesting company and a business because I feel that it's very popular among women, and I know friends, family that shop at Ulta pretty often, and I feel that they do have a pretty strong brand and customer loyalty. So I think it's pretty solid. But the question is, what is their valuation looking like, and what are their growth projections looking like? Because I'm not sure if they have a huge amount of growth. Well, sales this year are expected to climb by 10%, but that is also coming off of the lockdowns and everything else. So, and then next year is expected to climb by 6%. Earnings per share are expected to climb by 8% on average over the next 5 years. That's compared to almost 30% before. And right now, the current share price is actually quite a bit lower than most analysts' price targets. And most analysts have some pretty good ratings on it. But what's the valuation? So for Ulta, valuation, it's about 50% more expensive than the sector, but it's quite a bit lower than their 5-year average, like 40% lower than their 5-year average. So Ulta's looking pretty good. I would have to research them, of course, but it's never been a stock that I paid much attention to because I'm not big on makeup and those kind of products. And I like to invest in companies that I actually use or I like their products, or I use their products or services. But of course, you saw that huge drop in 2020, but then they recovered pretty quickly after that by a huge amount, and they're still growing. So Ulta is probably a safe bet long term, but I don't know. It's not something that I've really liked myself because I'm not too big on their products, I guess. Let's see. Pazilla says, thank you, Ale. You're welcome. Bird says, appreciated, man. Value your thought process more than anything and helps with valuing stocks. You're welcome. Thank you for the nice comment. AC says, hey, Ale, thoughts on Duolingo right now? Really liked their last earnings report. Execution seems great and lots of optionality here. Nice comments on the math product in the call too. Yeah, and I think that's going to be huge for Duolingo when they start expanding into other parts of education, not just language. Duolingo is an app that you use on your phone to learn a language, but they're expanding into math, they're expanding into science, and there is so much potential there. And they have free versions of their education, whereas you go to college and you spend thousands of dollars on classes, sometimes maybe hundreds or thousands, but it's a much cheaper form, and I think it's going to be on the rise. And I really like Duolingo. It's a spec stock for me personally, but it's a spec stock that I really like for the long term. Someone else asked about Airbnb, and that's actually one that I'm a little curious about right now because, yeah, house prices are going down, but how would that affect Airbnb? Because, I mean, I guess you do want people to be buying houses because it'll just increase the market size, I guess, of Airbnb. But I mean, that the potential market is so massive for Airbnb because there's so many people that don't even use Airbnb that own homes. So the fact that Airbnb has crashed by so much, I mean, it's getting to some pretty interesting levels. So in the past week, Airbnb has fallen by almost 8% in just this past week. And from their highs, I mean, they were at 212 to now 114. They've lost like close to half of their value. So Airbnb has plummeted. And then what are their growth projections? I'm pretty curious about that. A, B, and B. And let's see what their growth projections are. So financials, see if I can get this to load. So yeah, the thing is that they struggle with profitability. So it's definitely a spec stock. They plummeted in 2020 because nobody was traveling during the pandemic, and that hurt their, that people were just not traveling. They weren't using Airbnbs. So that really damaged them. They took huge losses. I mean, they would normally take hundreds of millions of losses. They took billions of losses this time, and in 2020. And sales also plummeted. But then they recovered, by a huge amount in 2021. And they're still not profitable, but they might be soon. And sales are expected to climb by close to 40% this year and another 15% next year. And EPS is expected to climb by 45% on average over the next 5 years. The current share price is a bit lower than the average analyst price target, but I think analysts are still kind of negative on Airbnb, so the price targets might not be that high for them. And then when looking at their valuation, Airbnb, man, they're expensive. I mean, they trade like hundreds of percents more. Well, they're not profitable, so you can't really use the PE ratio. And actually, when you use a price to earnings to growth ratio, they're actually not that high. They're less than 2, but still a bit high. But that you can't really use earnings. You have to look at sales. But price to sales, they're like 8 or 9. So yeah, that's the thing about Airbnb. They're just not a cheap stock. Like Airbnb was probably overvalued to begin with, and that's part of the reason why it crashed by so much. But over the long term, I still think Airbnb could probably soar over the long term. Like, how much are they doing in sales right now? They're doing 8 billion in sales. That's pretty high sales. I don't know. Yeah, I still want to say that they're gonna grow by a lot. They're already doing pretty high sales, but I still think that they have a lot of future potential. I don't know. I'd have to think about Airbnb. The problem that I have with Airbnb is what's like their moat, or what's like the barrier to entry in that market? Couldn't anyone just make like an Airbnb app? Like, do you have to use Airbnb? I guess the moat for Airbnb is that it's a very popular brand. People trust Airbnb. It's been around longer. It's the first to market, so people kind of trust the brand more. So I guess that's the barrier to entry in that market. But in reality, like anybody could just create a similar app, and then what happens? What if like Zillow starts doing that? By the way, Zillow was one of the biggest losers. Where are they at? So Zillow, let's see here. So when looking at the biggest losers for the past week, Zillow Group lost 15% over the past week. And that's, again, going back to the home sales. Home sales are going down, so people are not buying and selling houses. That's where Zillow makes their money. Zillow is like an app, it's a platform to buy and sell houses. It's to look up houses, buy and sell them. So that's going to hurt them. But you look at it, how much has Zillow dropped? Because Zillow, I think, is a pretty good, company, and I think they do have a lot of future potential, but they have been hammered. Their 52-week high was over $100. Now they trade at $30. And they used to trade over $150. So they dropped by like, 5 times or something. I mean, they've dropped by a huge amount. Like they would be 5 times higher. So they've lost, 70 something percent. I don't know, but a huge amount. Like, let's see, 150 to, let's say 30. 80%, at least like 80% that they've dropped. So they've plummeted by a huge amount. And how is like Zillow priced? I'm curious. What's their valuation like? Because I've always thought about Zillow, but I don't know if it's a good stock or not. PE, so they're like 30% cheaper than the sector. Price to sales is also like 90% cheaper than the sector. Price to sales is less than 1. How profitable are they? Are they even profitable? I'm not sure. I don't normally track Zillow, to be honest, but okay, so look, revenue for Zillow is expected to plummet by 24% this year and then drop by almost 70% next year. So Zillow sales are like crashing. It's pretty bad. And that's because the housing market. That's everything that I showed you in the housing market. But their current price is, pretty low. But I think analysts are still pretty bearish on it. And when you look at financials, I just want to see how they do with profitability. So yeah, see, they're not profitable. So Zillow is not profitable, but man, they can have some huge growth spurts sometimes. Look at that 2020 to 2021, and like more than doubled their sales. But they're still not profitable. We're likely in a recession. House prices still very high. Home sales going down. It's just not a good environment for Zillow. But isn't that usually when you're supposed to buy a stock? Is like when there's all that pessimism, because then over the long term, when things recover, it could do better. The problem is that I don't think the economy has really crashed as much as it should have. Like, I think the economy is still holding up a bit too strong, and the fear is that there could be a bigger recession kind of looming and bigger issues in the housing market and everywhere else. All right, guys, I'll probably just kind of answer a few questions here if anyone has some questions. And you can ask me anything you want. Doesn't have to be stocks, but if you want to ask me about stocks. But we've been going on for quite a while here. I think the live stream has been going on for, does it say? Like over half an hour. So we've been going for a while. But I've been having fun. I hope you guys enjoyed this, and let me know if you guys want me to do more live streams in the future. But let me just run through some questions here if anyone has any. So Wiki Ali says, what are your thoughts on recession, and do you think the market has already hit the bottom, or we can expect a bigger crash in the future? Thanks for the good work. So thank you for the nice comment, and I kind of just already mentioned that like a minute ago. I hadn't seen your comment, but yeah, I do think that we're in a recession right now, but I think that it could get worse. But I'm a long-term investor, so I normally don't care if it gets worse, but I do think it could get worse. I think the economy is I think the economy is trash right now, to be honest. But anyway, so a couple people say, yeah, we're likely already in a recession. I would agree. Pozilla asks, should I trade my Berkshire stock for Verizon or Pfizer? Okay, I can't give investment advice, so I'm not telling you what to do. If I owned Berkshire stock and I had the option of investing in Verizon or Pfizer, well, I personally like Verizon and Pfizer, and I'm invested in them, so I think you know what my answer is. But I like Verizon and Pfizer for their dividends, and I think they have like leading businesses, so I like them for the stability and the dividends. AC says, yeah, Airbnb is also executing really well. My biggest worry would be regulation, and I hate that I don't know how big the risk is. I know, that's kind of how I feel about Airbnb too. It's like I'm not sure how big the risk is, but it's always been kind of tempting to me. Like Airbnb has always been a little tempting to me as a stock. Let's see. HK, what do you think about Chinese stocks? Well, I like Chinese stocks, and I think they've been hammered in recent years, and I think they're being a little bit slept on. The issue is that investors have is that with Chinese stocks, you don't have a lot of protection. So if things get worse, and of course, there's always the fear that China could be, invading Taiwan. There's always that tension between the U.S. and China. I don't think anything's going to happen, because I think if the U.S. goes to war with China, I think we've got bigger concerns than the stock market. So I generally don't really think about that, because I just think like, okay, worst case scenario, I mean, do I really care that much about stocks? Sure, maybe I do, but I just don't think that's going to happen. Let's say I hope that doesn't happen. I hope they don't go to war or anything like that. But the bigger issue is that you don't have a lot of protection as a foreign investor in Chinese stocks. So Chinese stocks could at any moment screw you over, and they've done it in the past with other stocks, Luckin Coffee, and there's been other examples too. And that's some of the issues that I have with Chinese stocks. But looking past those issues and concerns and risks, I think as risk stocks, like as speculative kind of high risk stocks, I mean, they're the most attractive out there. I mean, it's like buying the Chinese Amazon, it's like buying the Chinese Google, and those are gigantic markets, and these stocks are trading much cheaper than their American counterparts. Obviously for a reason, they're much higher risk, but I think there's a lot of potential in Chinese stocks. And I know there's a lot of like principle involved and ethical concerns, and that's why a lot of people don't want to invest in Chinese stocks, and I totally understand that. But I just think like from an investment standpoint, there's a lot of high risk, but there's also a lot of high reward potential. And I think China really needs a lot of these companies to be successful. because I think they want to dominate the world. So I think they need a lot of these companies to be successful. And I shouldn't laugh about that, but anyway. Let's see here. Cheese Cutter says, yeah, you should look at Canadian banks, TD and Scotia Bank. I probably should. I've just always preferred investing in JP Morgan Chase because I feel like I understand it better, and I'm not big on bank stocks. They're a little too boring for me, and I don't enjoy researching them. I don't really enjoy researching their products and services. So I usually just kind of stick with Chase because it's the most trusted kind of well-run bank in my opinion, but I probably should look at other banks, to be honest, expand my horizons. Carlos says, do more live streams, just make it an upcoming event. Yeah, it's probably a good idea, so then people would know that I'm about to go live. So yeah, I will do that, by the way. And thank you for stopping by, Carlos, and thank you for the suggestions, and thank you to anyone else who has any suggestions or anything like that. I really appreciate it. This is the first time I've done a live stream in a very long time, like years, and so I am a little nervous. I'm also messing around. Like, I've got multiple computers set up here. I'm not really sure what I'm doing. And I tried going live a couple times and I messed it up and I had to delete them. And I don't know. This one seems to be working, I'm hoping. But thank you for any suggestions. And they'll get better over time. I can make you that promise. He also said, also maybe do stream on Twitch. As a Twitch streamer, I'd love to see you there. I would too. I don't really know much about Twitch, to be honest. But so I believe in Twitch you can also stream like video games and stuff. I do love video games, and I would also like to just stream just in general, but I don't know much about Twitch, so I'd have to research it, figure it all out. Okay, let's see. Birdsea says, the fear of possible China-USA conflict is scary. I own a lot of Nvidia in Taiwan, and Taiwan issues is messed up. Yeah, I mean, I love semiconductor stocks, so it's definitely a weird time that we're kind of living in right now with the whole Taiwan situation, and we'll see what happens. Of course, Congress just passed the CHIPS Act. I made a video about it, but I love semiconductor stocks, and I think a lot of them have huge potential, especially Nvidia, in my opinion. Let's see. Also, some talk about electric vehicles. By the way, just to kind of touch on electric vehicles before I end the live stream, there was one of the biggest drops was in ChargePoint this past week, who dropped over 20%. And then you had SoFi, by the way, a fintech, a pretty popular fintech, does some similar things to Robinhood, but it's kind of like a digital bank, and they dropped by a lot, over 17% this past week. Might have to take a closer look at SoFi, but I don't like SoFi because I think the biggest part of their business is in student loans, or it's at least like a very big chunk of it. And I think Democrats are going to keep pushing to eliminate at least some portion of student debt, and I think that could hurt SoFi a lot. So I think it's a little too risky for me, but I'd have to do more research on it. I shouldn't speculate too much on that because I'm not as knowledgeable on it, but that's one concern I've always had with SoFi. But then you had, Shopify dropped by 16%. Roblox. What is Roblox, by the way? I feel like everybody talks about Roblox. Is that a video game? I'm a big video game player, and I'm not even sure what Roblox is, but I think it's a video game. I think like it's a video game. Maybe kids play it. I'm not entirely sure. Xpeng, so electric vehicle out in China, they dropped by almost 13%. Bilibili, that's also electric vehicle, I believe, and that's down 11%. There were some other ones too, but maybe because I have it as a filter for large caps, I think maybe that's why you don't see. 3M dropped by over almost 5%, guys. Like, I think 3M is a pretty good stock, very good dividend, and they've been struggling because of the economy, a lot of investor fears. Also, coming out of the pandemic, they used to sell a ton of face masks, and now you're coming essentially off of the pandemic, and so people are not using face masks as much, definitely not as much as they used to, and that's kind of hurting 3M's sales because a big part of their sales were face masks. But I like 3M. Like, I'm just saying, I really like them. They got a good dividend. I want to see it fall more. Like, keep falling, 3M, keep falling, because they've grown that dividend for over 6 decades. Like, I don't think that dividend is going away. Keep falling. Give me a higher yield on that. But there were other electric vehicle stocks too. But anyway, ChargePoint dropped over 20%. ChargePoint, I believe, is like one of the biggest charging station companies. So I believe they're one of the ones that builds the charging infrastructure to where, so if you have an electric vehicle and you pull up into a charging station to charge your electric vehicle, I believe ChargePoint is one of those companies that builds those and runs them. And then I think they lease them. I think they lease them to malls. I believe they lease them to schools, to apartment complexes. And I think that's going to be a growing market. So ChargePoint dropping over 20% might be something worth looking into, but I'm not sure. Billy says, Ollie, don't forget dividend paying stocks in upcoming live streams. Yeah, I'll definitely cover dividends. I love dividends. I just kind of briefly talked about 3M, but I definitely love dividend stocks. And Carlos says, he's talking about Roblox, and he says, yeah, it's a video game where you make games in it. Oh, that's interesting. I wonder if it's like a kid's game or if adults play it too, but that sounds interesting. Anyway, I think it's going to do it for this live stream, guys. I hope you enjoyed it. Thank you so much for stopping by. We only have like 30 viewers, so not very high. but you know what? I love connecting with my viewers, even if it's just a small group of you. In fact, I think I like that even more because you're the viewers that I appreciate the most. I mean, you're some of the most loyal kind of viewers. You're the ones that stop by no matter what. And I know that there's a lot of other loyal viewers who didn't stop by because I didn't set up the live stream. They didn't even know I was going to live stream, so they'll probably watch it later on. And I appreciate all of you for sure. But to everyone that's here, thank you for stopping by. I really had a good time chatting with you. It's going to be funner in the future. I was a little nervous this time, but it will get better, I promise. Thank you so much for everything, and I will catch you guys in the next video. Hope you're all doing well. Take care. Bye-bye.